Brent, how forceful can you be on your buy, and why at this point?
Well, short term, they're in a pit stop, right? There's no question they're transitioning, and the ad market's a big question as it relates to the macro. I think long term, again, the company's capable of $15 of earnings power. I think, you previously mentioned the stock's trading at 14, 15 times earnings. If it gets a 20 multiple on a $15 earnings power, you're at $300 a share. So it doesn't take much to get there based on where they're at. Remember, they're still growing. You've got a good bottom line and good cash flow plus a $50 billion buyback. So ultimately, I think long term, it looks like they're in a good spot, but be very clear, they are in a pit stop. And we've seen other tech companies, as we've said, whether it's Adobe, Microsoft, go through these pit stops. And I think that is the opportunity. Is this a Adobe, Microsoft pit stop when both these stocks were at 30 and they went to ultimately $300 to $700 a share, both of them? Or are we going to stumble for the next couple of years? That's the big question. I think right now it's a little clouded by the overall macro picture, because remember, this is entirely an ad-driven model, and advertising models are seeing a downturn into the macro environment. That's the first thing you can turn off in a macro environment. So I think it's a more of a longer term call based on what we're seeing in the short term on the macro.
Right. Mike, where's your thought on this? And knowing that, as you point out, forward time 16 is fairly reasonable, wouldn't you say?
Look, it is a reasonable price, but I think you framed it the exact right way. Let's think about the long-term time horizon. I'm at Canvas Ventures. I think like a VC, and I think in public market tech investing, especially now, you have to have a 5 to 10 year time horizon in tech, and think about what are the long-term buys you want to make. I'm not saying you have to sell off Facebook or an extreme bear, but you talked about that framework of $30 to $300, for Adobe. Is this a pit stop, or is this, is there a long-term 10x possibility? It's just harder to see right now. John was talking about Meta not really being the focus, and there's a lot of opportunity in the core business. I think that's true. The core business is chugging along, but look, they just lost Cheryl, the person who built their ads business, who was critical. And these all represent these moves where I think Zuck is saying ads might not be the most important thing in the long run. And he's realizing that to 10x the opportunity, they've got to have a next act. So could their next act be the metaverse? Maybe. But you're almost betting on a Series A company like me, a VC, and it's so hard to pick. You could also bet on Apple being a leader in the metaverse. Right. You could bet on another company being the leader. It's hard to say that they have the winning recipe. One little factoid is the Unity CEO who just came out and said he doesn't think the metaverse will be about real avatars. He thinks it's going to be more virtual avatars, people using different anonymous identities. Kind of if you've read or watched Ready Player One, was handed out to everybody, those actually aren't real avatars. So there's all these little nuances to what's going to win on the metaverse. I could see Facebook, doubling their business from here, but it is harder to see the 10x case without a second act.
Question for both of you. Brent first, is Meta a growth or a value stock?
It's priced for value now, and the street's modeling single-digit revenue growth with the potential to return to double. So it's value today.
Mike, what do you say, value or growth?
And that's the thing. I'm primarily a growth stock investor. So
what is Meta?
I think right now you'd have to look at it as a value stock, and on a PE basis, the value looks attractive, but we have a saying in VC, like, don't try to get a bargain when you're going in a company. Try and go for the 10x upside.